If you've been trading for a while, you might wonder what's the difference between the people that are in the top 1% and the guys who are struggling for years to become profitable traders. I have interviewed traders for the last 10 years on my podcast, talked to close to 600 traders now, and I can notice a few things that make a big difference in their results. Today we unpack this into a one-hour masterclass, going over things that really make a big difference that can change your results. This is coming from real traders, people who have been trading for multiple decades and are still successful at it. And I want to dive right in because there's a lot of good content. Make sure you take some notes. Comment below with your favorite advice or quote from this masterclass and we'll dive right into it.
I'd say it's the same reason why newer traders aren't able to spot opportunities in the market, right? The price action moves too much, right? Zones change, like the profile of a particular trade can change so fast. But as you become more experienced, right, you can sort of see it even kind of before it's coming, or have an idea that it's coming. And the same thing is true mentally and emotionally. And that's why I have my clients, why in the mental game trading, like the mapping of your pattern is such an essential kind of component here, because you have to be able to create the data points that tell you probabilistically that you're likely to go on tilt, right? That you're likely to get angry and do something dumb, or that the fear is rising and you're likely to close a position early or jump in prematurely. I mean, again, it's not causal, but probabilistically, like, we can understand certain tendencies within our emotions and recognize the data points that indicate them. And I'll, give you one from the book, which I think is quite distinct. A client who would tend to get greedy recognized, and he was a swing trader, right? Recognized that as soon as he opened up his brokerage account to see what the running P&L was, he knew that his mind had begun to get greedy, and he was quite literally like several steps ahead, or several steps away from actually making a mistake that would materially impact his trading. But that was the first indication that he had now kind of deviated from an optimal state of mind, which didn't care about the running P&L. He's like, he knows where there are certain check marks that he's going to start to scale out. And until that alert comes through, there's nothing to do, right? But the fact that he's now thinking about that open P&L means that he's begun to get greedy. So it's like being able to kind of have that self-reflection to say, all right, I tend to jump into positions prematurely when the market's ripping and I'm not involved. So are there any kind of precursors to this? Like, does it matter if you had a losing day, previously? Does it matter if you're in a drawdown? And if you are, well, then you have to be prepared, because any given day, like, the market can rip. And so at the start of that day, you're preparing yourself. All right, you're in a drawdown. Be aware, if the market rips, this is what you're going to do, right? You're going to sit on your freaking hands until you get confirmation. And you have to understand that if you're able to do that, then you got one data point in the position of progress and being able to gain more command of your decision making and ultimately being more, quote, disciplined. But really, you're just at that point kind of managing the emotional volatility better.
I tell people to hide their P&L all the time on their platform, but what is it about looking at your P&L that makes it so bad or so against kind of your trading?
Because I think you start to believe that it's yours. It's like, it's not bad for a basketball team to look at the scoreboard and see where you stand, provided that it informs you on like what you're going to do next. Like, all right, we're down by 15. We need to actually kind of change our game plan. But if we're up by 30, like, you don't want to change your game plan too much, because that's where. So here, if you start looking at your open P&L, is that informing you on what you're going to do? Does it feel like you've already kind of won the game, even though the game's still open, right? I think that there's an attachment to that open P&L that makes it feel like it's yours, or you feel really down if it's negative, and then your emotions start to maybe look to manipulate something. Maybe you look to get into another trade to try to make up for something. It's I think very difficult for traders to see, and I use the basketball analogy again. It's difficult for traders to see that like singular trades are like the equivalent of like one play in a basketball game, right? It's not one game. If you lose this trade, you win this trade. It is not, oh, I won a basketball game. It's no. You had a turnover, made a bad pass, or missed a shot, or you made one, made a great pass. Right? It's like singular moments in the scope of a long game, because as traders, to play like the equivalent of a basketball game is what, 60, 90, 180 days, depending on how many trades you're taking, depending on your style. Like to really be able to realize your edge, it's just not like, so it's I think a challenge to kind of view it that way, but it helps to change the nature with which you're like connecting to P&L and looking at P&L. Because in an intraday basis, it should just be informing you on what adjustments to be made. And if that is not happening, then it's an irrelevant data point. It is because it makes you feel like you have to do something special when that's actually distrusting the core of your competencies, right? You're basically trying to feel like you have to do something more when it's like, no, do what you already know how to do. If what you already know how to do is good enough, then just keep doing it, because there's enough other people who are trying to do more that are going to end up doing less. And I know that's hard, but the traders, the players that have the most confidence, the most conviction in themselves, they don't go for the home runs, right? They don't go for the miracle pass or try to force another shot or another, a bad play or a bad trade, because they know that their style, their strategy works, and they just need more time. They need more reps doing that. The same as the discipline, right? I would put, patience in that same category. You have to first rule out that what you're dealing with is not an emotional issue, because your ability to wait can be hijacked by anger that says, I need to make money back now after having lost, 2 trades in an unfair, successive way, and that revenge trading spikes and your attempts to be patient are gone. Now, assuming that that's not the case, and right, there's not like big emotional volatility, I think generally speaking, traders mistake their job for being something that is much more like normal, like a regular salaried job where you're getting paid for showing up. Like you clock in and you make money, and you're there, you make money, right? You're paid on your performance. I mean, if we were sitting, just to keep with the basketball analogy, if I was sitting on the sidelines with stacks of $5,000, and I said, all right, LeBron or Steph, like, you make this, you get 5K. You lose it, you got to give me 5K. I mean, the game changes dramatically. But that's effectively what trading is like. You are paid on your performance. And if you're not feeling it right then you can't say, all right, I'm going to take this bet. Like, if you're tired, if you're distracted, if you're bored, if you're like looking for action because you feel like you need to be in the market and have something on, you're not in a good state. And so, that is the cool thing about trading. To use a poker analogy, you can sit and wait for aces. You can fold 55 hands in a row and not lose a nickel and wait for aces, right? As a basketball player playing that 5K game, you can wait until you feel perfect and take that shot. So to kind of figure out what that line is, it is something that you have to define for yourself. So if you feel like you are being too risk averse, then yes, we can deal with that problem. And if you feel like you're, kind of jumping in too quickly and a bit greedy or a bit impatient, then again, you have to kind of define that line for yourself, just as any athlete would. If you're being too risk averse, again, let's assume that it's not like a deeper emotional issue, right? With, a lot of fear or a lot of weakness in confidence, or sometimes it can be like, blown accounts creates a little bit of scar tissue / trauma. And so it becomes hard for you to get into certain types of positions because they remind you of some bigger blowups in the past. Let's assume that, again, it's just this sort of more basic risk aversion. I think sometimes it's helpful to calculate the risk of not acting. That, like, if you have goals, those goals are not going to be handed to you, and there is a risk to inaction, right? There's opportunity cost. There's the bleeding of maybe your time, like, and the same in can be used if you're constantly cutting your trade short, right? If you're not holding for 3R and kind of cutting out at 1 or 1.5, like there's a very large risk in that you may never actually achieve your goals. So sitting on the sidelines provides sort of this like cloak or feeling of safety, but in actuality, you're sort of sitting in a burning house, and you have to make a decision, because if you don't, then your dreams could quite literally die. Confidence is, I think, a very wildly kind of misunderstood thing in general. And people tend to feel like they have to have it in order to be successful. And the reality is you need skill. And if we're talking about trading, you need a lot of skill in trading, proven over a large sample, that your edge actually is profitable and wildly profitable in what you're after. But the reality is that I've worked with 30-year veterans who objectively are less confident than traders that have been trading for 18 months. It's like, well, how the hell can that happen, right? And it's because confidence is really just an emotion, right? We care far more about the skill that you have than the feeling that you have about that skill. And that's a very key differentiator, because people feel like if they don't have the skill, well, then I'm going to go after the feeling, and I'm going to feel like I'm going to be confident. I'm going to have this aspirational, inspirational kind of mode towards me, and it can generate a lot of confidence. But if you suck, you suck, and that's not going to change just because you feel like you're any good. And this is more so true in poker, where poker players look to play against, at least the clients I work with, they look to play against the people that feel like they're good, but actually have no skill. They're called fish. And in trading, unfortunately, it's really easy to make money. And then that can create some blindness to make you think that you're any good. And I've worked with plenty of traders and talked with plenty of traders who early in their career thought they knew what they were doing, and they made, especially some of the crypto traders back in the day, it's like, you're doing nothing objectively right other than the fact that you got lucky to be here in 2016 and you're making money hand over foot. You have no real strategy that's skill-based and reliable, and so it's going to be kind of taken away from you. So that's what happens, right? They have these huge success early, it all crashes and disappears, and then the motivation either is there to actually get skilled or they leave the game. So the point is that confidence is really not what we're after. We're after the skill. What we are after is for the confidence to be most accurately reflecting our skill. We want our feeling about what we have to be accurate. That's what we want. And so, yeah, it's easy for people in other areas of their life to not have much social skill, to not have much skill with the opposite sex or whatever sex that they're looking to try to get. I mean, or whatever domain that they're not skilled in. And then here you come into trading, and it's like, man, this game checks all the boxes, right? The intellectual challenge, the love of the markets, the curiosity, the fact that it's open worldwide, thousands of competitors, all these different participants, and I can make money from anywhere in the world. Like, sign me up, and I pour myself into it, spend 5 years, get incredibly skilled at it, making a ton of money. Yeah, you're going to be a lot more confident in this thing because you're making money, doing well, skilled. Everywhere else, not saying that you're like doing nothing there, but it may be very difficult for you to develop that skill. So, when you see people in different walks of life, it generally comes down to how they feel about what they have, right, from a skill standpoint. A lot of it comes from just a lack of recognition of the steps that you're taking along the way, because we're kind of constantly looking forward, and it's, kind of tend not to like reflect back on like, how the hell did I get here? And I think if you can do that like monthly, you can make sure that your confidence is going to continue to climb up because you're recognizing what you're doing well. We tend to only focus on what we do poorly. And that's not wrong, right? Because that's what makes us better. But so our motivation stays high and we continue to progress. But as you said, our confidence doesn't really climb in the sort of in tandem. And it's because we're mostly focused on what we're doing poorly, not as much as what we're doing right.
Obviously, most of us, especially if you're using MT5 or other platforms, you've got access to so many more markets than we did when we first spoke. Back then we had a few minor and exotic Forex pairs. We had some gold and silver possibly. And now we've just got all these indices, these other metals, the cryptos, the commodities. And I found, and it's been completely by accident because I didn't have access to those markets back in the early days, 20 years ago. I can take a trade on lead, or I can take a trade on silver against the yen or Bitcoin. Today, I've taken a sell trade on Bitcoin right now on a 12-hour chart trade. I can take trades on those other markets, indices, all sorts of things, and the logic works exactly the same. And so all that has done is it's opened us up to be really selective on what trades we take based on, we get high probability candle patterns. And so I've completely removed myself from thinking I live in New Zealand, therefore I'm focusing on the New Zealand dollar or the Euro US because it's the highest, traded pair with the tiny spread. To me, it doesn't really matter now. I'm trading the pattern that I look for. It could be on, Bitcoin or the Aussie 200 or zinc, or it doesn't matter. And that's the beauty of it. So that, I suppose, is the thing that has changed. Logic, strategy, principles remain the same. Just we have access to more markets and more time frames. Yeah, it's interesting. So I've got people that will be on my webinars that have been there 15 years. And I have other people who, after a few months, you don't hear from them. You've really got to want to do this. I think that's very important. You've still got to have that excitement and enjoyment out of it. You've got to approach it realistically. Obviously now there's more ways of doing well on prop firms and all that type of stuff, which is great, but you've still got to be in a position to do that properly. You can't just come into the market and go, I know nothing about trading. I'm going to spend a month researching online or doing a course or some podcasts or something, and then go, I'm going to go and open a prop firm. Because, and the issue that I see is it's almost made it seem too easy. And as you and me both know, trading's not easy. It takes time and dedication, skill, etc. to do it. And I think if you come into it with your sole intention is to have to make money, it's probably not going to work for you. If you come into it with the intention of, I'm going to dedicate a bit of time into this, and a bit of expense, and learn it properly, and do the basics and do the homework and seek help if that's the way you want to go, and be consistent, then it will work. A lot of people come into it a little bit sort of either gambling mentality or, don't see that they have to put some effort in. I think that becomes the issue. But look, I've got a lot of people who are doing incredibly well, and prop firms are a big help for some of them who choose to go that track. But what people don't see is they've gone and done a year or two of work and demos and small live accounts and some successes and some failures to get to that stage, like you and me both have. I'll go back to the helicopter example. Fantastic, fly around, do all these cool things, but I've been doing that for 10 years, and it's taken a lot of trial, not so much trial and error with the helicopter, but a lot of effort and dedication and learning and expense to get to that stage. People just see the end result and think it's easy, and don't see like anything good in life, it takes a bit of effort. And even if you trade like I do, maximum 30 minutes a day on charts, twice a day, you still got to know what to look for. You still got to know how to do that. You still got to put all those lots of hours into it to get to this stage. And I think that's the other thing that people fail to see. They just go, oh, he's just trading 30 minutes a day and must be easy. I can do that. Well, yeah, it is over time, but you've got to develop that skill to be able to get to that stage. Oh, it's definitely discretion as well. Mechanical, it's not 100% mechanical. I suppose mechanical in terms of like, does this look like a suitable pattern or not? Yes or no. And then a little bit of discretion comes into it. I think you always need that as a manual trader. I don't see the need to, and I've been trading for over 20 years and I still enjoy it and I still love it because I find that you can blend it with other things in life. I think if I just sat here purely glued to the screen 5 days a week, and now, of course, crypto's at weekends as well, I wouldn't enjoy it. And, even if you're making lots of money from it, it's like, why would you do that if you could do that in And I'm not doing the 30-minute thing to be lazy. I'm doing it because that's what suits me. There'll be some other days where I'll look at 4 or 6 hour charts during the day and maybe more than 30 minutes. But as an example, I spent a few weeks in Europe a couple of months ago, and I was just trading once a day, and still did really well. You don't have to trade all the time to do well. To me, it's more about the quality of your trades, not the quantity of them. It's interesting, isn't it? And look, I do have people that trade the short time frame charts. Some people trade 5 and 15-minute charts. I've got one guy that trades 1-minute charts, because that's what he wants to do. And it's like, go for it if it works, and it is working. But I kind of like to think that with trading, especially to start with, the reality is that most people have a job or family or travel or whatever it is in life. And the reality is that most people are not going to dedicate all day and night sitting watching charts to start with. So if you can make something work by looking at your charts once or twice a day and still do your normal life, what it does is it takes away that need to have to make money from it again. Like if someone comes to me and goes, I'm going to quit my job in 2 months and I'm going to become a full-time trader, I'm going, whoa, that's right. Have you really thought this through? Probably not a great idea. It's too much pressure. So look, yeah, in terms of the excitement about it, I still get excited once, twice a day of taking trades, but I don't feel the need to have to sit there watching every pip move up and down and risk a crazy amount on a 5-minute chart. And the thing I found years and years ago when I did look at those shorter time frame charts is that I felt I should be taking a trade because I was sat there at the computer and I was ready to trade, rather than the market telling me it's ready to give me a pattern. And I think there's two distinct problems there. If you're trading short time frame, you just bring too much emotion into it. You start doing silly things, or you start rushing your trades because you're worried about the price taking off and you haven't got in yet. You go, oh, it's bounced back, it's moved back 3 pips, I'm going to close it, close the trade quickly. And it's like, that's not what your rules say you should do. And if you get away from that emotion, and that's where I come back to the thing, it doesn't matter what time frame chart you trade. The way that I trade and teach people is that every trade has the same risk. So you could have a 15-minute trade if you want to, or you could have a 6, 8, 12-hour chart trade, or daily or weekly chart trade. They both have the same amount of risk. It's just that one's got a bigger stop loss than the other, but likewise, it's got a massively bigger profit target than the other. They're still the same reward to risk, same risk per trade. It's just your lot size changes. So it comes down to what type of trader you want to be. I went through everything possible that you can imagine. When I started trading, it was the early days of TradeStation. It was the early days of expert advisors. There wasn't a lot of proof in what people were doing on those things. So all that, I've been through all that. I've been through the news trading, living here in New Zealand, been up in the US hours at like 3 o'clock in the morning and all those things. I've straddled trading, non-farm payrolls, done all that. If I had someone to actually guide me and someone to follow in those early days, that would have been a massive advantage. And I'm not just saying that because I'm a coach. But I'm saying that because if you had a community of people who were all trading one strategy that was a successful strategy, that would have helped. What I found when I started trading is that you had, I'm not going to name names of different community forex sites, but there were some sites out there that had all these threads that looked really cool, and then it would go off on a tangent. It would never, like a week later, it would never be the same strategy that it started because someone would add all these things. And what I love with our forum site is that it's one strategy. Everybody's there looking at the same charts at the same time, trying to help each other. And I think that genuine community of whatever your strategy is, however you want to trade, if you have a community that's dedicated to people just looking at that one strategy, I think that would help. It helps remove that clutter that you have, all that doubt that you have. I like everybody else in the early days, was jumping from one idea to another idea to another idea. And the reason I was doing that is because it didn't none of them really worked. And I couldn't find out there a proven strategy. So I think if you have a proven strategy and someone to help you and a community to help you, it's going to be a massive shortcut in your learning curve and your confidence. Improves your confidence.
Hey, so how are you enjoying this masterclass? Just one quick thing here. I want to make sure you are getting the right strategies, the right tools to trade. So if you're wondering how I trade, I've been on YouTube now for the last 10 years or so, a bit more than that. And I've only been trading 2 strategies for all this time. If you want to learn how these strategies work, I'll leave below a free course in the description. The first link will be a course where I go through my strategy in detail, how I look at the market, how I trade trends and reversals in the market. And I think you might like it. It's something that I've been spending years building and also years trading, and I think you'll like it. So click the first link below, grab it for free, and I really hope you make the most of it. Now back to the masterclass.
The usually higher level, my goal is to make good to great, so we work with a very simple formula. Performance equals potential minus interferences and resistances. So it's my job as a mental performance coach to understand what are the hurdles, obstacles, and roadblocks that are really preventing people from being optimal. So when you merge the psychoanalytical side, it's like, how were they raised? What is their programming, early childhood programming look like? And then when you talk about the neurosciences, how does the brain really work? So at the end of the day, my clients become students of themselves, right? Understanding, since this is a trading podcast, what's the difference between impulsivity and intuition? Like, everybody always wants to think about intuition, but if you don't know anything about impulsivity, you're going about the steps the wrong way in order to be optimal. It's like, it's the old, addition by subtraction. When we're able to take things out and really focus on what matters most, that provides a great road for excellence. I'm one of those guys where if we could figure out where you're coming from and understanding what's holding you back, you're limitless, right? But there's, it's easy to say something like that, but there's got to be a structure in place in how we go about doing it. It's not like we're just going to go and just get as big as we want and that. It doesn't work that way. There's a sequence of events of how we stretch people. So what we like to call it is a mental foundation. So we set up these foundations that are very intentional about how we go about thinking, how we talk about emotions, because emotions are just data. How do we feel, choose a behavior, which is responding, not reacting, which then creates a new experience for you, which then internally, neurologically, starts building new pathways in the brain. So where you used to do something that no longer serves you, we're actually building new default routes in your brain. So this is what he does now or she does now. So it's really this game of repetition. People always ask me, how long does this take? And I say, I don't know, right? Everybody's wired differently. Because when we are just thinking about the outcome, we really lose and it diminishes our skill set. So it really is this sequence, this process, this structure that we put in place. It's very bespoke, right? Everybody has experienced things differently. So not everybody is the same. So as a coach, you have to understand who your client is and where they're coming from, and then actually where they want to go and what are they trying to accomplish. It's a very intense process, but that's why it's not meant for everybody. As children, sometimes we feel judged, right? Or we're embarrassed, or we have frustration, we have rage, rejection, like all fear of failure, right? So all these things, even though intellectually we know they're possible, there's an unconscious element that's wrapped around all these. So when I say these things, it's very intellectual, but we know there's an emotional blanket that goes around that. So it's our job to pick up on these interferences and reduce them as much as we can. Judgment's a hard thing, right? So we're just meeting. I don't know how you were raised. What does your programming look like? So some of this programming doesn't work for you any longer. So sometimes we have to really erase it and build new things. There's some things that are helpful, right? That help you thrive. But a lot of stuff is survival based. That's no longer needed. So everybody has a different makeup. It's our job as coaches to understand that to listen to what you're not saying, pick up on emotional patterns that are no longer helping you make the best decisions you can. So that's when I say interferences, there's a whole catalog of them. It's our job to pick up on them and really reduce them, right? Because interferences lead to impulsivity, right? And impulsivity is reacting. We don't want to be reacting. We want to be responding. So when we're feeling a certain feeling, like my assistant used to always say, you're always nervous. Well, nervousness to me was a good feeling. I didn't want to be nervous, but I knew how to behave when I was feeling that way. As opposed to running away, nervousness meant that I'm onto something. So that feeling actually was an intuitive feeling for me, but I had to get to know it, right? Feelings are very important. You can't put them on a shelf, right? When we make decisions, emotions are a part of that, but we don't want those emotions on the field. So it's that really awareness of understanding who you are so we can consciously choose behavior that's beneficial. As opposed to just go get them, right? It doesn't work that way. There's got to be steps. There's got to be a structure, because when you build that, then you can leverage that. It's scalable, it's sustainable, right? And we can stretch you to see what you're really capable of doing. So how do you get off at the right exit, right? So recovery is everything. Resetting is everything. You can't dismiss how you feel, right? So when people, tilts usually happen from the top, right? Where people come a little more relaxed. They're not really following what they need to be doing. So then how do we as traders pause? Right? If you take a big hit, whether it happened or it was a bad beat or whatever you want to say, there's still residue from that trade. So then how are we able to acknowledge that, recover and reset? Now, listen, sometimes it's the second trade that gets you, right? Where you're starting to react. But a great way to combat that is a daily reset. Like, let's say you had a great day. Reset, 0-0. Get back to that even ground, right? I feel good. I did this well. How do I get better? If it's a bad day, get into the body. Go take a walk. Down regulate your mind. All right, that sucked. That was a bad day. All right, I feel it. What do I need to do tomorrow? Where does my mind need to be? Where do I need to slow down? And the biggest thing here is people tend to become more cautious, which feeds sometimes into impulsivity. Don't be cautious. Be more conscious of what you're doing, right? Because when we're cautious, we're defensive, right? And that means sometimes when we're defensive, we're what? We're reactive, right? We talk a lot about something called aggressive patience. So what is aggressive patience? Aggressive patience, we know what patience is, right? Be patient in the trade. But often patience sounds very defensive. Aggressive patience is almost like a jaguar in the brush waiting, right? All systems go. You can almost feel their breath. They're ready to strike. So if we're able, whether it's a drawdown or whether it's a normal day, to really be able to sit with ourselves and have that breath, to what am I trying to accomplish here? Where do I need to be, right? As you're waiting, right? That's aggressive patience, right? I'm fluid, I'm relaxed, I'm not rigid, but I'm ready, right? I've done my prep, right? I've trained my body, my mind. Now I'm ready, right? That's a great place to be. So when we go down to these, whether it's a win or a loss, how do we get back to that aggressive patience? How do we down regulate? So we're in a position to make the best decisions. And ready for this one? Again and again and again, until it becomes our default network in our brain. Always. Right? Even, as a coach and I invest in companies, I'm always like, hey, slow down. Where do we need to be? How do I need to be thinking right now? Where am I? How am I feeling right now? Oh, I feel stiff. All right, get up, move your body a little bit, right? I'm feeling a little fight or flight. All right, down regulate, Ev. Literally, I'm saying this to myself. So if you ever see people I work with, they speak to themselves because thinking it is different than verbalizing it. Because when it leaves our mouth, not that, you can't see words, but you're able to see the experience in the words. You can hear it, you can feel it, and it gives us a better opportunity to make a better decision. It's out there, it's in front of us, right? It's not behind, it's not in the darkness. So what happens, you'll see a lot of people talking to themselves. I feel this way. What should I be doing here? That's really a great way to become more conscious. And it's out, it's in front of you, right? We could pick up on the words we use, and it just gives us more data. Well, listen, pressure is a privilege, right? There's a utility of sitting in this seat that you can actually make a very good living. But too much pressure feels almost chaotic, right? We jump the gun, we react. So we all have to know where we lie in this pressure scale, right? I want all my people to be uncomfortable, but not so much pressure where we're almost paralyzed to make a decision. So we have to recognize at what level of pressure am I optimal, right? No pressure, there's pressure always. So how are we able to perform within that realm of pressure? We're all different, right? We all have different scales. So to recognize that, say, you know what, this is a lot of pressure. I got to make these decisions quick. Acknowledge that. But the next question should be, how do I get better in these situations to make my best decisions? Am I breathing? Am I down regulating? Am I training myself that when all this data is coming at me, whether it's time related, well, it's usually time related, right? How fast am I making decisions? How quickly am I responding and not reacting? That's just training, right? But it's training with an intentionality that these moments come. I could visualize them. How do I want to be performing in these situations? And what does that look like? And what does that feel like? It's like I could see you thinking about it, right? It's true, like you're visualizing, it's okay, this is how I want to perform. Okay. And now that's repetition. It's mental training, right? Because you know where it's interesting is that we don't have the app that tells us when this happens. We don't have the app where, oh, here comes an obstacle, hurdle, emergency, and challenge. We don't have that. Nobody has that. So as opposed to always thinking positive, right, which can be toxic sometimes, I want to be in the seat of being opportunistically realistic with a positive attitude. That what did I do today and how do I get better? If this happens, how do I want to respond? Right? Because things happen. That's reality. So how quickly can I get my internal footing back to make another good decision? And that's just training, right? So then the latency between emotions and conscious behavior gets shorter and shorter and shorter, right? The more you do it. And then what happened, the experiences now, so when the brain's predicting the future, what could happen, right? Catastrophe, this, we're like, wait a second, I've done this before. So we're able to draw. That's why, when you hear people say, give yourself a little bit of credit, it's true. We know neurologically now, giving yourself a little credit, not a big cheerleading party, a little bit of credit actually helps in the formation of the circuitry. Right? But it can't be like overwhelmingly, right? Because the opposite of I did amazing is I did pathetically. I did horribly. So you really want to watch how you feed yourself via words, right? And we want to be operating. I'm not saying we're not allowed to be excited, but we want to pick up on what is the emotion I'm feeling right now, right? It's almost like if you're in a position and it's working, you feel great and it's really moving and you're excited. Well, you got to acknowledge, hey, I'm feeling excited, but where should I be making decisions now? Right? Because now that excitement's on the field, not doing anything. And you don't make that tick when you should. So how you say, I'm feeling extremely excited right now, but I know when I'm excited, I don't make the best decisions. So one, let's say I feel euphoric, let's say, right? It's an emotion. All right, I'm feeling euphoric right now. Space. What's the best decision I have to make here? Right? So now that euphoria is not on the field, when you should actually be doing something possibly, but now you've given yourself that space to make a conscious decision. And that's on the other side as well. In panic.
The only thing that I didn't even know at the time that was similar was the discipline. So I'm a very, very disciplined person, and I'm a very routine orientated person every single day. I'm not going to say that I'm perfect in the way, because like sometimes the way I live can be a little bit messy, but in my job, 100%, I have to do the same things every day. I generally eat the same things every day. I exercise at the same time every day. And that routine for my training years, for when I was a footballer going into working in the gym, I didn't know at the time, but it put me in really good stead with my trading. Like now, I absolutely love my trading routine, and that must have stemmed from my years of exercising. I think for most people, yes, but for me, no. I think a lot of people think day trading's fast and furious, and they have to do this, and there's the markets move so fast, blah blah blah. I honestly, I don't really care. I'll click a button, and I believe in a lot of Buddhist principles. I'm a very Zen person. So as soon as I click the button, I will sit there and just wait for the outcome, regardless win or lose. I don't move my stops. I don't move my targets. I will just stay calm and let the market do what the market's going to do, whether I'm in it or not. Just let it play out how it's going to play out. I have no control over that situation. So that's the way that I try and live by that philosophy for day trading. But I can understand why people get so erratic with day trading, because it can be more emotional, because the moves are so much more pronounced and so much more volatile during the day period. So I understand how they feel. But when I'm coaching and when I'm talking to my junior traders, I try and help them learn that philosophy of, look, the market's going to do what the market's going to do, whether you're in it or out of it. You have the choice to go in or out. Nobody's making you do this. I'm 100% a trend trader. I don't understand people that try and pick tops and bottoms in the markets. I can't fathom why that's an appealing thing, because that adds to the stress. Like if you're sitting there and you're thinking, Tesla's gone too far to the downside now, I need to try and pick the point of the reversal. You're going to need 4 or 5 attempts to work out where that reversal is, and you're going to lose 4 or 5 times to work out that reversal is. And I'm sure people listening would have tried. But on the other end of the scale, it's like, for me, I swim with the tide. Like if the tide's going in one way, I want to swim with the tide, and I want that tide to carry me in my trade rather than trying to swim against the tide and getting it right. Yes, I don't know what it is. Maybe it's an ego thing that people try and like pick these amazing entries. I don't think there's such thing as a immaculate entry or a precise entry. I don't think that even exists. I think you get the flow of the market, you try and enter the flow, capture what you can during that flow, and then walk off happy. Try and walk off happy. Yeah, so I generally have an anchor time frame, which is a higher time frame that I use for my trends, which is the daily time frame. And then I enter off of a 5-minute time frame most of the time. Basically, I want both of those trends to be in line. So the more similar those two charts can look to each other, the better for me. So if we're trading above the moving average on a daily time frame and it's at a 45-degree angle, I want to be trading above the moving average on a 5-minute time frame, again at a 45-degree angle. When we get a small pullback, I'm looking for like a little bit of a confirmation signal that we're trying to get back into the direction of the underlying trend, and I'm going to try and enter based on that. That's normally how I try and work this out. I use very little indicators. The problem with that is ego, right? So if you're a technical analyst, your point is to work out whether your analysis is correct. So I've written for places like TradingView, FX Street, Zero Hedge, Kitco. So I've been an analyst for a very long time. So our job as an analyst is to turn around and write an analysis report and say, oh, look how good this analysis was. Look, I was right, the market doesn't care if you're right or wrong, that's not the problem. The readers do. So your job as an analyst is very different to your job as a trader. Your job as a trader is obviously to protect your risk and make money, right? Your job as an analyst is for people to read your articles and for people to think you're smart. So the ego is very, very different between the two. Okay, so that's actually my area of speciality as a coach. So as a coach, I work more on performance than I do on strategy. Strategy, I'm not bothered. I've got strategies that work. People have strategies that work. That's fine. The discipline side and the performance side is where I excel with the people that I trade. So the first thing I do is I try and slow this down for them. So I say, look, if you can prove to yourself you can take one trade a day based on one signal every single day for 20 days, then I'm going to start working with you. Then I'm going to see if you can actually do this or not. And that's the first step, is like, look, slow this down, get this down at the beginning. Just do one thing, do it once a day, and let's see if that works. And what that does is that starts to build that muscle. Just like when you go to the gym and you do squats and you're starting to, build your leg muscles, or curls and you want to build your arms or whatever you're trying to do, that's a muscle that needs to be built as well, that discipline muscle. So, if you're trying to exercise and you jog around the block, you can't even jog. Let's say you're walking around the block and you start 5 laps a day. That's the place to start. If you can prove to yourself that you can just do 5 laps a day and you can do it every day for a week, that's step number 1. That's the beginning of learning how to be disciplined. So like in Atomic Habits, when they say you wake up, you do your bed, that thing. Soon as I'd say a month, 2-3 months down the line, you're golden. You're not even going to think about it anymore. It's kind of like the frame of what you're doing it for. So it's interesting. The thing is that if you focus on the process, the money will come. In the gym, if you focus on the process of your training, the body will come. That's the thing about it. So what your focus should be on is not the goal. The outcome is never the focus for anyone. That's going to cause you anxiety. You're living in the future. You're not living in the present. And that's the key here. So every day, if you wake up and you live in the present, you do the right things for your body, you do the right things for your mind, the future will take care of itself. So it's the same thing in the gym. In the gym, if you're doing the right thing for you today and you're eating the right things for you today, 3-4 months down the line, you're going to see the results. And it's exactly the same with the trading. Obviously a lot of these are Buddhist philosophies, but I find, like, for me, that's the best way to live as a trader and personally. Just for my trading sphere, if you're, I'm not saying I don't go out and have fun. Of course I do, but from a trading and an exercise point of view, it's a really important thing. Process is the key to this. Okay, so just straight and off the bat is just that there's no such thing as a holy grail. There's nothing there, and then obviously learning to lose is a key factor in these things. So if you're not chasing something that doesn't exist, and you actually realize that you're going to lose in this game more than you are in any other game, your ego is going to take a big hit. They're the two things on a daily basis that can really help ease your mind and calm yourself. In terms of routine, try and wake up and do the same things every day. So, like, in the sense that I'll go through my routine, right? So I wake up in the morning, I see what my staff are saying. I look straight at the markets as the next thing I do. I don't trade the European markets, right? I only trade the US markets. So what I do is I go and ask my traders, how were your trades? And I look at the markets and I kind of hold them accountable, really. I say, look, the DAX has done this today. Did you manage to get this trade? Because the setup was there. We all know each other's setups. So if they do something wrong, they're accountable to me. If I do something wrong, I'm accountable to them. So we all coach each other every single day. So that's the first thing I do when I get up. Then after that, I have 1 or 2 sessions with a few people that I'm coaching. And then as soon as I get to that point, I've got a really strict routine. So for 10 minutes, coming up to like an hour before the trading session begins, I will meditate. So I make sure that I clear my mind, that I'm listening to my senses, in the sense that, like, I have no preconceived notions of what's going to happen today. Once I've done that, I go over the European markets to see what sentiment's like coming into the session. Then I join the session with my traders and we talk about all the news that has come out. And then I make my watch list for the day for what I'm trading. As soon as the first setup comes in my watch list, I take the first trade and then I sit back and I wait and see what happens with it. And that's my trading routine every single day. After I finish trading, because obviously it builds up some stress in the body, before I have dinner in the evening is when I exercise, so I can wind down, get all the stress out of my system, have some dinner with my family, and then I'm chill for the rest of the evening. So every single day is the same routine for me.
Like at the beginning, you go through this hockey curve, always the early losses, and then you slowly go back, and you're one trade away from blowing up your account. In 2022, people who would see my channel, $2 million loss, which was a big portion of my life, one trade. So it takes one trade to blow up your career in trading. So a lot of people are asking me that, how long does it take to become a consistent trader? And I said, well, maybe 6 months. And then, but it never ends there. Like, when can you say I'm fit? Never. You have to always keep watching the diet, exercise and everything. So it's just a learning progress. I think the one thing that kept me going was the community that, we are running. So Bearable Traders is a big community. Like, every day people are coming. I have, a lot of traders that are helping me in the leadership team. So the thing that the community helped me keep going. But it's funny that a lot of them later told me that they could see you for 6 months. This position was, I started in November 2021, all the way up to May that I closed it. For 6 months, they could see me every day, just slowly getting down, that impacts me. But the community was very helpful and supportive. And I think that was the reason that I kept going. Not by myself, through the YouTube videos, Ross Comer on Warrior Trading has a lot of really good educational videos. I followed him, although he's a penny stock trader. There's other YouTube channels that I learned, but eventually became the trader that I am from learning from everything. So I give credit for, like, for example, Ross at Warrior Trading is really good educational content in his channel. And I never paid for a mentorship. Actually, we had this discussion this morning in the chat room too. I never paid anything for mentorship. I was just too stingy. Like, I was really too broke and too stingy to pay anything, too cheap. But I think it's worth to have a mentor, at least for a few sessions, because a lot of time the mentors gives you some tips that helps you, like, for a couple of $100 an hour, maybe you can save thousands of dollars down the way. I think mentorship is valuable. So the number one thing is, guys, that you have to love trading. Like, I was playing video games when I was a kid. Like, I love these movements and you have to press right at the same time. You have to love it. I had a lot of people read my book and community, and they say, it's too much work for a couple of $100, and they were doctors or lawyers and stuff. That makes sense. They just don't enjoy doing that. It's not for everybody. You have to love this concept of video game, which is essentially a video game. So you have to love the nature of this pattern recognition, because, it's like a quiz every single day. So that's the number one. And the second is you have to have a really desire to go through this learning curve, because you're putting yourself through a very difficult thing. I really love the lifestyle, climbing every day and traveling the world the way that I want. People travel the world when they are retired and cruise and stuff, but I want to travel the world when I'm young and the way that I want, like climbing and stuff. So I really love the lifestyle, and that's kept me going on. And people can have different reasons, like for family or for retirement or whatever reason it is. You just have to find your things that drives you, and then just always put that as the head, as your, the reference to try to push toward that. If you really want it and you cannot do it, then maybe you should stop, because that's the definition of insanity. You just keep doing something that doesn't work and repeating it. So desire is very important, but you have to see out all other elements. Do you have time for it? Do you have the time zone for it? Do you have the patience for it? Do you have, a lot of people, like, their family situation may not allow them to trade. Like, I was young, blew up $2 million, and, I could survive, but a lot of people can't recover from that kind of losses. So that's one element. Luck is also, I think, is a very important element, especially at the beginning when you get some early beginner's luck and make good money. So it sort of gives you a cushion. But in the long term, the consistency doesn't come with luck. So there are so many elements in that. And it's okay if you try trading for some time and, you move on. There's nothing wrong with this, because it's business, entrepreneurship. You start a business, doesn't work, and then you move on to another one. The things that you learn during the process about yourself, I think it is valuable in the next challenge of life. The high altitude climbing that I do, like Everest and other big mountains, it really helps me with mental resilience. First of all, it pushes you to focus on each step. Like, Everest is all about step. Just don't have the mental energy, oxygen. There's no oxygen to think about anything else. Just one step. And another thing is about climbing Everest specifically is that you have to accept to die for it. So you have to be committed to the cause. It's not a very dangerous mountain, but you have to be committed that you die, because there are dead bodies over there. So when you see I saw the first dead body, I'll send you the picture if you want to put it in the video later. When you see the first dead body, you say, fuck, am I going to be dead like him? I'm going to turn around. And that happened to me. I talked to my Sherpa, I want to go down. I said, no, don't look at it, push me higher. And I said, okay, I'm going to die. It's okay. I had a good line. I'm going to be in the news. Okay, let's at least finish it. That thought went into my mind, and that helped me to push forward. So the mental resilience is very important. Like in high altitude climbing, I like to challenge my mind. You just have to keep it as, it's a work in progress. Don't set up a goal for yourself because you set yourself for failure. Just keep pushing and keep going and keep it on the side. I'm a big advocate of part-time trading. I know you trade full-time and travel the world and stuff, but that's not everyone have this luxury. So, trading part-time is very important. Keep your career, keep your business, keep your passion, and just try to make a little bit of money on the side until you're ready. Like I had the job until 2019. I still had the job and I was making good money from everything, but I still had the job 2019, then that's where I quit. You're in my office. There's a huge office, there are people working, we're building trading terminal, there's, everything is stuff. It's just my drive, like money in the account. Okay, $10 million and $12 million doesn't really make a difference. But you want to build something, you want to have something, you want to have things, create something, growth in your business, in your career, is something that's very important. Like having the money by itself, like I traded from the home and then I came here, now my day has to go on, but by doing something. Discipline, of course, that there are soft skills that you have to practice, like discipline. Like put a challenge for yourself that you want to have a really good diet for 1 month or no alcohol for 1 month. Not to lose weight, but to see if you can challenge yourself to a certain discipline. Just 1 month, 2 weeks, something like that. And if you can't do that, don't even bother with trading. Because if you can't stay sober for 1 month, no alcohol, you go to a party, go to a dinner, everybody's having a beer, the environment demands it. Do you have the mindset that say, hey, no, I'll go with the Diet Coke instead? Like if you can do that, then that's something that you can say, okay, I'm going to go to trading, because the trading does challenges you. But if you can't do that, forget about it, in my opinion. So challenge yourself. Everybody who's watching this, challenge yourself to something. And not an unusual goal. Oh, I want to have a 6-pack by the end of 2 weeks. No, just 1 month, no alcohol, or no sugar for 1 month, or something like that, and see if you can do it or not. If you can't do it, then forget about trading.
What I see is that people are getting excited when we are performing well, and then usually some type of drawdown happens. So this is something that I usually see, but it's true that Murphy's laws are working in trading. So if I'm implementing new strategy, for example, I always expect that I start with drawdown, because I don't know why. Don't ask me why, please. But usually I'm always starting new strategies with drawdown. It was also very good idea, not mine. I got it from one hedge fund manager, is basically waiting for some type of lower drawdown before you start trading the strategy. It's good because you are psychologically somehow prepared that if the strategy is not working and it's getting into bigger drawdown than expected, you can switch it off. But you are at least halfway to this metric. So yeah, it's working. They start trading too early with their money. They don't understand the market in general, I would say, and they don't understand risk management. And I would say one thing that people are not thinking about it much. I'm in the market to take their money. You are in the market to take someone else's money. We are in the market to make money. And this is not the place we can just extract profit. It's competition. So you have to think about trading as a competition. It doesn't mean that it has to be super difficult. In fact, our strategies are pretty simple, but you have to understand the market, because if you don't understand how the market is moving, what does it mean that it is trending? What does it mean that it is sideways based on your strategy or your strategies you are trading? You will have very tough times when you will go through the drawdowns, because this is probably one of the biggest mistakes traders do. Even though they have some approach that could be profitable, if they have this approach, then they don't stick with the solution during the drawdown. And it was my mistake too. I think everyone made these mistakes in the past. Don't get me wrong. It's tough. Drawdowns are always tough. I'm in trading for over 18 years, and I'm definitely not enjoying drawdowns. But again, if you understand what you are trading, you can get back to data, for example, if you trade systematically, and you can check what is happening and if something like that happened in the past. And if it did, you are pretty okay. You just have to yeah, you just have to be focused and disciplined and stick with the solution. Yeah, plus emotions, of course, like especially in discretionary trading, emotions are huge, and you have to work on it a lot, because being disciplined during a highly volatile market, when you are always under some type of emotions, especially if you are trading intraday, because I would say that intraday discretionary trading is the top elite type of trading you can choose, so you can behave that way. Probably it is not the type of trading you can do at night after your children go to bed and you were working 10-12 days at work, because again you are against the biggest professional that are trying also make money there. I'm thinking about it because if you check some research, and I'm really research driven, it is not like completely zero-sum game, but I'm thinking about it in that way that if you lose, or you have to lose for me to make the money, and I'm always saying it because people don't understand it that much. Like, market is not there to give them money. You have to have your edge. Firstly, there's the most important thing. You have to know that you have edge over the other market participants, and just then you can even start thinking about making money. But it's long-term journey. It's I would say that you have to understand quite a lot of things before you can be comfortable in trading and in drawdowns and with the volatility and so on. You have to know which books to read, so I always recommend books from algo traders who have some proven track record. For example, Nick Rage is great, but there are others. Lawrence Berstov doesn't matter that much. In fact, I would choose algo traders because based on what they are showing you, you can again understand the market, and then you should always start your own research. It doesn't have to be that complicated. People are often afraid of it, but the start can be as simple as download the data from Yahoo, for example, open it in Excel spreadsheet, and looking at what is happening if market is above some moving average, what is happening if market makes some move that is twice as big as the long-term average. This kind of understanding is important, and you can do it pretty simply. Even if you want to trade discretionary, I think you should understand the market on data. But that's my way. That's how I can confident in the solution, and how I can even offer it to our clients on daily time frame, which is giving me a lot of comfort, because if you are trading some very short time frames, you can have very good strategy that is performing well, and the performance can stop and turning to the south very quickly, especially on 5-10 minutes time frame, because the edge can be arbitraged out pretty quickly. But if you are trading on daily time frame, then usually if the strategy stops working, you get into some type of plateau when you can switch the strategy, you can change it slightly, or you can just keep with it if you can see that it is perfectly normal. So yeah, sometimes I'm changing strategies, but the frequency is like 1 a year or something like that. I usually tend to add strategies to the portfolio.
Alright, so I hope you get some good value out of this. We love to feature advice from real traders to help you grow, help you become better in trading. We hope you can achieve your goals. If there's any advice in this masterclass that you like, make sure you comment below with it. Let us know. Share it with other people. If this video was useful for you, make sure you click like on the video. Also share it with people that you think will benefit from it. If you want to see more of these masterclasses, check out the link over here in the corner, and we'll catch you right there. A lot of good content there.